Good morning, shareholders, ladies and gentlemen. My name is Andrew Wabari Cairo, Chairman, KCB Group PLC. I hope you're all keeping well and staying safe. It gives me great pleasure to welcome you to the 49th Annual General Meeting of KCB Group PLC. Since the confirmation of the first COVID-19 case in Kenya on March 13, 2020, the government has made a number of directives progressively restricting movement and gatherings. The Public Health COVID-19 Restriction of Movement of Persons and Related Measures Rules 2020, which are part of the Public Health COVID-19 rules, have been promulgated in an effort to curb the spread of COVID-19. The measures introduced through these ministerial directives and rules include restrictions on public gatherings, a nationwide curfew, and geographic restrictions on inter-county travel enforced at county borders. The implication of these restrictions in our context is that a physical meeting of shareholders in the manner anticipated in the Articles of Association of the company would not have been possible during the duration of the crisis. As such, and to ensure compliance with the law, the company is holding its 49th Annual General Meeting through electronic means, having received a no objection from the Capital Markets Authority pursuant to the order of the High Court of Kenya in miscellaneous application number E680 of 2020 under the provisions of Section 280 of the Companies Act 2015. Being one of the first listed entities to embrace the use of electronic means to interact with its shareholders at a general meeting, and the first listed company to hold its annual general meeting through electronic means, I am honored and pleased to have this opportunity to interact with you today. The COVID-19 pandemic has seen the world confront its biggest health crisis this century. Our thoughts remain with the individuals and communities affected by COVID-19 crisis. We are truly grateful and salute the healthcare workers and first responders providing much needed services at the front line. We as KCB Group recognize that all our actions during this pandemic are essential in keeping our economies across the region going. We have incorporated guidelines provided by the government and adopted a raft of measures to cushion our staff, customers, and stakeholders from the effects of the pandemic. As a business, we appreciate that we are not entirely immune to the impact of this pandemic. With the likely continuation of the crisis into the currently unforeseeable future, we anticipate and expect that our business performance will be subdued. We have implemented business continuity plans and have undertaken business modeling with worst-case scenario in mind. The organization has prepared itself to operate under these extremely adverse circumstances to the benefit of our customers and shareholders. We will continuously communicate to you, our shareholders, on the business as the year progresses. We remain hopeful and stand in faith that this too shall pass. Ladies and gentlemen, last year, KCB Group undertook a historic acquisition of National Bank of Kenya. This was a crucial milestone for KCB Group in line with our expansion strategy. The integration of NBK into KCB Group family has been successful. NBK's performance has significantly improved, and we are confident that it will continue to support the group's growth ambition. Ladies and gentlemen, looking at our business performance for the year 2019, we can summarize it as a good year. Not only did we achieve a 9% net profit growth, but we also managed to drive financial inclusion across the region. We supported our communities through our different initiatives and also continue to play an integral role in propelling the economies in our Eastern African region. Our strategy for 2020 to 2023 is dubbed Beyond Banking. This strategy is heavily pegged on transforming the bank from a traditional bank into a digital one as we aim to keep up with the changing current and future needs of our customers. This new direction is very timely in our world today, which has forced us to go digital. Shareholders, as we transact the business of the day, I wish to conclude by thanking you all for your continued support and assuring you of our commitment today and beyond. I will now take this opportunity to introduce to you those with me on this live stream. On my right is Mr. Joshua Igara, the Chief Executive Officer and Managing Director, Kenya. Next to him is our Chief Financial Officer, Lawrence Kimathi. On my left is our Company Secretary, Joseph Kania, and our Auditor, KPMG, represented by Mr. Joseph Kariuki. At this particular point in time, shareholders, I'd like to thank KPMG, who are outgoing external auditors, having completed their 9-year term in terms of our group charter, and I'd like to thank them very much for the years that they have served the group diligently. I also acknowledge the support provided by Image Registrars and PwC Kenya for their work towards the successful electronic meeting. The meeting has been convened to conduct the ordinary business set out in the notice meeting. I shall now ask the Secretary to report on the registration and confirmation of shareholder participation through registration. Mr. Secretary.
Thank you, Chairman. I confirm that a total number of 19,136 shareholders holding a total of 1,388,913,471 shares, representing 43.22%, have registered and participated in the electronic AGM. I confirm that the meeting is properly constituted.
I therefore declare the meeting to be duly convened and duly constituted. I now call upon the Secretary to read the notice convening the meeting. Secretary.
Thank you, Chairman. Notice is hereby given that the 49th Annual General Meeting of the shareholders of KCB Group PLC will be held via electronic communication on Thursday, 4th June 2020 at 10 a.m. when business as set out in the published notice shall be conducted.
Shareholders, the 2019 Integrated Report and financial statements were made available to all shareholders through a publication in the local dailies, as well as the company's website as indicated in the notice convening the meeting. The chairman's report was published with the integrated report and published in the company's website. Shareholders, my report to you for the year ended 31st December 2019 is as contained in the integrated report on pages 32 and 33 in English and pages 34 to 35 in Kiswahili and shall be taken as read. I now take this opportunity to invite the Group Chief Executive Officer and Managing Director, Mr. Joshua Igara, to present his report to you for the year ended 31st December 2019.
Thank you very much, Chairman. The annual report or integrated report was shared. My statement is on page number 38 to page number 45. I will first salute our shareholders who are joining us from Kenya and East Africa region. We also have shareholders joining us from the Far East. I will say to those shareholders, good evening, and we also have shareholders joining us from the West. But overall, in the last year, our chairman has mentioned earlier that we had a major integration and acquisition of National Bank of Kenya that most of you are aware was approved in the last annual general meeting. We also had major conversations around our interest rates, which happened last year, and I'm glad to report that what we've been discussing a lot at the industry level, the interest rate cap has been lifted. We also perhaps have forgotten that we went through a very successful withdrawal of the older 1,000 shilling notes last year, what was called the monetization. And that was a year that we worked very closely, not just in Kenya, but across the region. So the year has returned positive results. The chairman mentioned around our performance, but I wanted to highlight four items on the performance of the bank. Our total shareholder return in 2019 was 53% on an annualized basis. We, at the end of this meeting, once we get approval from the shareholders, will have a dividend paid of 11.1 billion, and market capitalization of the bank this year is just close to 115 billion shillings at the end of May. And we just recently announced our first quarter. I will just mention briefly, we continue to support our customers and line this crisis. Most of our transactions have moved very strongly on our mobile and digital platforms this year. If I summarize for you the first quarter as a reminder, our total income has grown this year. Our assets are up this year 31%, reaching 947 billion. And Chairman, we are quite close to our short-term target of achieving a trillion shillings balance sheet in the next year. Our overall earnings for the first quarter reached 6.3 billion, which is 8.5% growth. And we saw positive contribution from all our businesses across the region. But as the Chairman mentioned earlier, I would say that this from March, we've seen an unprecedented environment for our business. The corona crisis or the pandemic has seen us change the way we work. So banks are also responding, and especially your bank is responding very strongly to support our customers. You may have seen our communication with the industry and the central bank. We are providing support for customers who have loan obligations to the bank. We have restructured more than 120 billion shillings of loans so far across the region. Most of those being in Kenya for small customers, for larger customers, what you call the corporate customers, and also for mortgage and SMEs. The bank is well poised, even in this crisis, to see opportunities. We're tightening our belts like everybody else across the world. We're also following from some of the countries who have gone through the crisis. I'd like to report to you that we have a very strong crisis management team that is working with the risk committee of the board and the group board to be able to get the businesses going through this crisis. Across our branches, if you have visited, you will see we implemented social distancing on all our locations, both at the offices, and we will continue to support our customers and protecting our employees across this period, not just in Kenya, but across the region. And obviously, there will be an impact, and you may be concerned about what happens in this crisis. The chairman mentioned earlier that we will remain robust, we will remain steadfast. We want to build a resilient business. That's what we have been over the last 123 years. And we anticipate lower transaction volume in this quarter and next quarter, much this year. Loan disbursement have been affected because of the crisis and asset growth. We foresaw higher provisions in the first quarter of this year, which will continue this for the rest of the year. And finally, there will be an adjustment on the asset yield because of the reduction of the CBR. So, but overall, I would say, Chairman, as I conclude, that as we go forward, our employees' health, our welfare of our customers, engaging in our national support is a big priority. The board is very much seized on working closely on enhancing liquidity management, assessing our portfolios for our customers, looking at the loans which will migrate, and managing those very strongly, and ensuring we work with our regulators across the region where we operate. And we remain optimistic that the country, through our medical providers, our national leaders, and the region, will provide a way for us to sustainably exit the crisis this year. And therefore, we stand a good chance to prepare ourselves to take advantages as we come forward. And we are committed to continue to deliver our strategy after the crisis, to remain a strong, resilient, and significant bank across the region and in the continent. And I am grateful, Chairman, to the group board, management, and staff for the support for the businesses and our collective effort in creating a long-lasting impact for our communities. And thank you, shareholders, for your support. I hand over back to you, Chairman. Thank you.
Thank you very much, Mr. Ugara. The Director's report was also circulated with the integrated report, and it is now contained on page 83 to 84, and I propose that it is taken as read. I will now call upon the representative from KPMG, Mr. Joseph Kariuki, our auditors, to highlight their audit opinion to members. Mr. Kariuki.
Right. Thank you, Chairman. Good morning, shareholders. As the Chairman said, my name is Joseph Kariuki, representing KPMG, who are the auditors of the KCB Group PLC. Our report and opinion is on page 91 to page 93 of the annual report. I will not go through the entire report. I will just go through the highlights of our report. On page 91, the first section of the opinion, report on the audit of the consolidated and separate financial statements. Our opinion, we have audited the consolidated and the separate financial statements of KCB Group PLC, which is on page 94 to 186. and which complies the consolidated and the company statement of financial position at 31st December 2019, consolidated and company statement of profit or loss, consolidated and company statement of other comprehensive income, consolidated and company statements of changes in equity and cash flow for the year then ended, and notes to the financial statements, including a summary of significant accounting policies and other explanatory information. In our opinion, the accompanying consolidated and the separate financial statements give a true and fair view of the consolidated and the separate financial position of KCB Group PLC at 31st December 2019, and its consolidated and separate financial performance and consolidated and separate cash flows for the year then ended in accordance with International Financial Reporting Standards and in the manner required by the Kenyan Companies Act. Shareholders, I will also go to the last section of our opinion on page 93, report on other legal and regulatory matters. As required by the Kenyan Companies Act 2015, we report to you based on our audit that, in our opinion, the information given in the report of the directors on page 84 is consistent with the consolidated and the separate financial statements. We have issued an unqualified opinion on the consolidated and separate financial statements, and the auditable part of the director's remuneration report on page 85 to page 89 has been prepared in accordance with the Kenyan Companies Act 2015. Shareholders, that is the summary of our opinion, and we have issued an unqualified report on the group financial statements. Thank you, Chairman.
Thank you, KPMG, represented by Joseph Kariuki, who was the audit partner. Shareholders, as you're all aware, shareholders were already given an opportunity to ask questions and seek clarification in regard to the financial statements and resolutions being presented. Responses were provided to all shareholders who asked questions and sought clarifications as provided in the notice calling for this meeting. Having said that, I invite 2 or 3 members who might have pressing questions to ask them using the questions button on your streaming screen. Please note that we might not be able to respond to all questions raised due to time limitations, and therefore, all questions received shall be collated and responses published on our website after the meeting. We have received 2 questions from our shareholders. The first one is a question from Mr. Patrick Kanyi, and I'll ask the CEO to read the question and then offer his response.
Thank you, Chairman. The first question from Kanyi, and thank you for the question, Kanyi. This year, we are not seeing you, but we will respond to why is the dividends being calculated as only 2 shilling and 50, yet you expected it at least to be 4 shillings. Kanyi, let me just remind that last year in November, we paid the first interim dividend of 1 shilling per share to all shareholders. And on the annual report, integrated reports on page, you will see, and the profits and loss statement, and you will find it that we've paid almost 3 billion shillings on page number 94, 3 billion and 66 shillings to share. And the KCB recognizes that investors will need to access their funds much earlier. We are among the few listed banks that actually pay interim dividends within the same financial year. And what we are proposing today is a final dividend of 2 shillings and 50 to all shareholders, which will amount to 8 billion and 33 million, which is again shown on page number 94. So if you put these all figures together, what we already paid and what we are proposing, Kanyi, it will be 3 shillings and 50 cents, which is a total dividend of almost 11 billion and 99 million shillings to all shareholders. So it's not actually 250, it's 3 shillings and 50 cents. And what the board is proposing today is the additional dividend of 250, which will bring that dividend to 3 shillings and 50 cents. And you know, Kanyi, that we have a dividend policy across the group, which we have spent for the last many years, and the board considered many measures, both in terms of the capital we need to grow, how much we are going to invest in the future in our businesses, and having an effective return. In addition, I mentioned earlier that our total return to shareholders last year was 53%. And therefore, I think those are the numbers, Kanyi, for the dividend for 2019. Thank you.
Thank you, CEO. We have also received another question from a shareholder called Michael Gaikia, and I'll ask a CFO to read the question and also offer his response. Mr. CFO.
Thank you, Chairman, and thank you, Michael Gaikia, for the question. I will read the question. Did the acquisition of Imperial Bank assets worth 3.2 billion require a delegates or shareholders ratification or approval? Please clarify. And there was a second part to the question. Are we sure that no contingency that may affect the investment negatively in the future, for example, undisclosed claims? Michael, the two main reasons why this acquisition, if we may use the word acquisition, did not need to come to the shareholders. One is this is actually an asset transfer and not an equity purchase. And therefore, we were not acquiring a subsidiary. And the second reason for this is it was actually being acquired by KCB Bank Kenya and not KCB Group, which is a listed entity. And we undertook a thorough due diligence that covered all the angles to mitigate the risk, and we're very confident that we've covered, mitigated any risks that might come up in the future. Thank you. Back to you, Chairman.
Thank you very much, Mr. CFO, for that response. Shareholders, as I said a little earlier, if you have any other questions, please keep sending them in. They will be collated, and responses will be sent back to you via our website. Shareholders, the following resolutions shall be passed by a poll, and all shareholders have received the SMS and email prompts to cast their votes. Voting shall continue until 1 p.m. today, that is this afternoon. The results of the poll shall be published in the local dailies and on the company's website within 48 hours. I will now invite the company secretary to read the resolutions to be passed. Mr. Secretary.
Thank you, Chairman. One, that the audited consolidated financial statements for the year ended 31st December 2019, together with the reports of the directors, the group chairman, the group chief executive officer, and the auditor thereon be and are hereby adopted. Two, that the interim dividend of Kenya shillings 1 per ordinary share paid on the 15th November 2019 is confirmed, and that the final dividend of Kenya shillings 2 shillings and 50 cents per ordinary share payable net withholding tax on or before 3rd July 2020 to shareholders on the register of members at the close of business on 27th April 2020 is approved. 3, that in accordance with Articles 94 and 95 of the company's Articles of Association, the following directors retire by rotation and being eligible, offer themselves for re-election and are hereby elected. 1, Ms. Georgina Malombe. 2, Mr. Andrew Wambare Cairo. And 3, Mr. Lawrence Mark Njiru. 4, in accordance with Article 101 of the company's Articles of Association, having been appointed by the board to fill a casual vacancy, Mrs. Ann Erickson retires from the board and being eligible, offers herself for re-election and is hereby elected. 5, that in accordance with the provisions of Section 769 of the Companies Act 2015, the following directors, being members of the Board Audit Committee, be and are hereby elected to continue to serve as members of the said committee. 1, Mr. Lawrence Mark Njiru. 2, Mr. John Nyerere. And 3, Mrs. Ann Erickson. 6, that the director's remuneration report is adopted and the board is hereby authorized to fix the remuneration of directors. 7, that Messrs. PricewaterhouseCoopers, certified public accountants, are appointed as the new auditors of the company in place of KPMG, certified public accountants, whose term expires at the end of this meeting until conclusion of the next annual general meeting. 8, that the directors are hereby authorized to fix the remuneration of auditors. Thank you, Chairman.
There being no other business of which due notice has been given, I take this opportunity to thank you all for attending the meeting and wish you a safe stay. Asante sana. I now declare the general meeting officially closed.